Most people believe that the only taxes they pay are the ones listed on their paychecks, but there is a hidden system of invisible taxes that is silently keeping the middle class broke. In 2026, earning a high income is no longer enough. If you don't understand these 7 hidden drains, your wealth will disappear before it ever hits your investment account. Today, we are analyzing the anatomy of these invisible taxes and providing a practical blueprint to stop the leaks and start building resilient wealth. The first and most dangerous invisible tax is inflation, the deliberate devaluation of currency that acts as a hidden tax on every dollar you save. When central banks expand the money supply, the value of your hard-earned labor is diluted, forcing you to work longer just to maintain the same standard of living. We are experiencing a global currency recalibration, where your $100,000 income buys significantly less than it did 5 years ago. The solution is moving from currency to assets, owning things that maintain their value relative to the expanding money supply. Next is shrinkflation, where corporations charge the same price for less product, a subtle tax on your daily consumption. Combined with quality fade, where products are engineered to break sooner, you are taxed through the constant necessity of replacement. This disposable economy is a tax on sustainability, draining your capital one cheap purchase at a time. To combat this, the new middle class is shifting toward buy-it-for-life mentalities, prioritizing durability over convenience. Bracket creep occurs when inflation pushes your nominal income into a higher tax bracket, even though your actual purchasing power hasn't increased at all. You are effectively being penalized for keeping up with the cost of living, as the government takes a larger percentage of your flat, real income. High earners in Tier 1 cities are hit hardest, where the cost of living is high, but tax brackets do not adjust for regional realities. Aggressive use of tax-advantaged accounts like the 401k or ISA is the only way to manually pull yourself back into a lower effective tax bracket. The convenience tax is the premium you pay for speed, from delivery apps to prepackaged goods, which can consume 15% of a professional budget. In a world designed to keep you busy, convenience is sold as a necessity, but it's often a tax on your lack of planning. This tax disproportionately affects families where both partners work, forcing a trade-off between time and capital. Reclaiming your time through simple automation and meal prep can refund thousands of dollars back into your investment portfolio. Modern commerce has shifted to the subscription model, a recurring tax on your attention and forgetfulness that drains your cash flow. We must analyze how small, unnoticed, incremental charges can add up to thousands of dollars in lost annual investment potential. The new middle class utilizes specialized digital tools to audit, cancel, and manage their automated expenses with clinical precision. Interest on consumer debt is a tax you pay to future you, robbing your future self of freedom to satisfy a present desire for depreciating goods. The housing crisis in Tier 1 nations has created a rent tax, where people pay more in rent than they would in a mortgage, yet cannot qualify for the loan. Eliminating high-interest liabilities is the fastest guaranteed return you can achieve in any economic environment. The final and most expensive invisible tax is opportunity cost, the wealth you didn't create because your capital was stuck in the first 6 taxes. Every dollar lost to an invisible tax is a dollar that fails to compound, costing you potentially millions over a 30-year career. We are experiencing the lost decade, where a generation has saved cash but failed to own assets, resulting in massive opportunity cost. Escaping requires radical financial awareness, auditing every single exit point in your personal economy. The most powerful tool in 2026 is an AI-powered personal finance assistant that can identify and automatically neutralize these invisible taxes. Asset transformation means turning saved tax dollars into diversified index funds, real estate equity, or scalable digital businesses. The goal is to move from being a payer to being a receiver, where the global economy works for you instead of against you. Financial freedom in 2026 isn't about how much you earn. It's about how many invisible taxes you have managed to eliminate from your life. Hit the like button and subscribe to join our community of global citizens who are opting out of the broke cycle. Which of these 7 invisible taxes do you feel is hitting your wallet the hardest right now? Let's discuss your strategy in the comments below.